Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. With me is Shel Bhatnagar and you're watching Market Today. Remember, yesterday we had an all-day coverage on how India struck Pakistan terror camps hard. In fact, after Operation Sindoor has successfully been done, we have actually seen that India has crossed an important political and military barrier with Operation Sindoor. It has demonstrated that it has the capability to strike targets almost anywhere in Pakistan without physically crossing the LOC in case there are any kind of misadventures that are done by our neighboring partner. Good news, there was no escalation overnight from Pakistan. Although the cross-border shelling that has continued and that continues to impact some civilians. We've had 15 killings from Pakistan firings overnight. That's something that we continue to condemn at this point in time. But the markets will be reacting to a whole host of global coverage as well. Remember, we've also seen overnight the US Fed Chair Powell's mantra, wait and see and then watch as well. There is no need to hurry and they've kept the rates steady and they've not cut the rates. That was largely being expected, but the markets are also cutting the June Fed cut expectations slightly at this point in time. A bigger news could unfold today with the first trade deal that the US has announced that it might announce today. Which country could that be is something that we will have to wait and watch out for. But importantly, it's the weekly expiry session and a whole host of cues that we'll be watching out for. Good morning, Shah.
Good morning, ladies and gentlemen. This is a day of reckoning again. We will be building up on the gains that the Indian markets showed yesterday. The resilience and the maturity of Indian financial markets was visible throughout the day. Just a mild knee-jerk reaction that happened in early deals in the first 5, 7, 10 minutes of trade, and then all major indices, including the rupee, appreciated in markets. That basically shows that the aftermath and the understanding of Operation Sindoor as far as Indian markets were concerned was very well understood, and this is a place where one major event that was to happen, which could have derailed Indian markets for a very brief while, is over. Again, everybody, whether it's the armed forces, whether it's the political establishment, whether it's the intelligence agencies and other parts of the government of India, remain alert about a possible Pakistani response. Only time will tell. But as they say, the elephant is out of the room, only the tail remains. How the Indian markets will react at this point of time is now in a fairly positive mode, and from now on let us expect that fourth quarter earnings, the deal that Sakshi mentions with the US, even if you were to take just one guess with the country that it could be, well, it would be an easy one. So we'll have to wait till 7:30 p.m. India time to get the name of that country. But we feel that the markets will respond positively. The rupee is likely to appreciate, FI numbers are likely to improve, and that all put together will have a salutary impact on Indian equity markets. Sakshi.
Absolutely. So let's look at what happened overnight. Wall Street indices ended higher after the US Fed left interest rates unchanged, brushing off US President Trump's demands for lowering rates at this point in time. The US Fed has said that the risks of higher inflation and higher unemployment have actually risen, and that's something that they'll be watching out for. The S&P 500 recovered from the two-day decline and it rebounded about 0.5% in trade. This rebound was primarily also driven by the chip maker stocks that also pulled up the Nasdaq up by about 0.3% in trade. The Dow Jones Industrial Average also climbed by 0.7% on the Wall Street as well. Now, as far as the Asian markets are concerned, they continue to trade pretty cautiously, moving in a very narrow band range as the Federal Reserve has reiterated patience regarding the interest rates, and investors are also holding back on the riskier investments, waiting on the outcome of the trade tensions between China and the US. There are again very different statements that are coming in from the US government on an everyday basis. So far, we were expecting that there will be a sharp climb down even on China. But right now, the latest statements that are coming in that further indicate that US is in no mood to sharply lower tariffs for China until and unless China really talks about what is the kind of deal that they can actually expect with this on the trade front as well. On the gift Nifty, we're again seeing, slightly muted start for the trading session today. Let's see how we build up. Remember, yesterday, like Shell pointed out, we did show a lot of resilience. 24,400 with us. Let's see whether we can build on from that level. 24,432 is being indicated at this point in time. Now, as far as the foreign investors are concerned, they continue to net stay buyers for the Indian equity markets for 15 straight session. They bought stocks worth about 2,585 odd crores, even though domestic institutional investors turned buyers after one day of being net sellers. They also bought stocks worth about 2,378 crores. Shell.
Ladies and gentlemen, the other three assets that we track in great detail, which is the dollar index below 99, crude oil per barrel is below $59 a unit, and of course the US 10-year yield. All three of them are quiet, which essentially means that this is a good move as far as Indian equities are concerned, and this is what will be looked at as far as markets are concerned in terms of positives. So, three positives: quiet dollar, quiet crude oil, and of course a quiet US 10-year yield. Gold is also in a sideways mode, so nothing much to be worried about. So, overall picture that you see of Indian equities at that point of time is calm, and on the day when there was a decent volatility in the market, remember the Nifty and the Bank Nifty traded in a range of about 600 and 300 points respectively. Foreign institutional investors poured in 2,582 crore rupees. This is again a mandate not only for Dalal Street but also for India. Now, what are the sectors that would be doing pretty well in the markets? We'll again be looking at the textile space. Remember, the UK India FTA is in place. Textile stocks like Vardhaman Textiles, Himmat Singha Seede, companies such as KPR Mills, companies such as Gokuldas Exports, which are both integrated textile mills, garment makers and exporters, showed a very strong move in markets yesterday. Some of them are likely to continue. The other sector that looks good is the automobile space, in particular Tata Motors, and of course two-wheeler stocks such as Hero Motors and of course Maruti. What is also looking good is the NBFC space, led by Shriram Finance, led by Jio Financial and Bajaj Finance. So, these are a couple of stocks that we are looking. Sakshi's marked the FNO expiry, and that is also a critical point of time that we will be looking at. As far as May 8th is concerned, let me just highlight the top performing stocks within the Nifty. It's M&M and Tata Motors as far as auto is concerned, respectively 6% higher on M&M on very strong earnings, and Tata Motors, of course, the India-UK FTA transaction has happened. Among others, Bajaj Finserv, Shriram Finance and Bajaj Finance are up anywhere between 4 and 3.8%, and of course a 10% uptick Sakshi on Adani Ports.
Absolutely. We'll keep an eye out on all those stocks, but remember, earnings front continues today. Asian Paints, Bharat Forge, Biocon, Britannia, Canara Bank, Chambal Fertilizers, Escorts Kubota, Idea Forge, IFL Finance, L&T, MCX, Titan, Sula Vineyards, Union Bank of India, Z. All of them will be reporting their earnings, so we'll keep an eye out on all of that throughout the course of the day. Meanwhile, the stocks that will be reacting to the numbers that they posted from yesterday on is something that you could definitely keep an eye out on. From the FMCG pack, it will be Dabur. Q4 highlights do show on a year-on-year consolidated basis. Revenue uptick of 0.6% at 2,830 crores. EBITDA, however, dipped down by 8.6% to 427 crores. We've also seen margins coming in slightly lower, 15% versus 16.6%, and net profit was also down by 8.4% to 320 odd crore rupees right there. Even though we have seen consumer care revenue up by 1.8%, food business revenue down by 5.3%, retail business within the company has seen its revenue dip by 20.7% as well, and international business, however, has seen a 19% constant currency growth and 17% growth during the full year as well. So that's something that we will track for Dabur. Coal India, the company has reported a 12.04% year-on-year growth in its consumer consolidated net profit at 9,593 odd crore rupees for the quarter ending March as compared to 8,530 crore rupees earlier. However, revenue from operations dropped by 1% to 37,825 odd crores. So we'll keep an eye out on that one too. Apart from this, if we look at Voltas, that's another one from the consumer durable space that we will look. Here, the home appliances maker has reported an over twofold rise in its net profit at 236 odd crores compared to 111 crores last year. The board has also recommended 7 rupee share per share of a face value kind of a dividend for the shareholders at large. So that's something that we will keep an eye out on. Apart from this, Blue Star has also come out with the numbers. Revenue up by about 20.8% at 4,019 crore rupees. We are also seeing that the EBITDA improved by 15.3% to 279 crores. Margins also coming in at 7% versus 7.3% earlier, and the net profit up by 21.3% to Symphony. Also, we will mark here consolidated year-on-year numbers show revenue improvement of nearly 47% at 488 odd crores. EBITDA improvement of 87% at 107 crores. EBITDA margins up 475 basis points at 21.9%. Net profit improved by nearly 90% at 79 crore rupees. Strong results coming in for Symphony on that front. From the liquor space, United Breweries will be in focus. Q4 highlights do show on a year-on-year basis. Revenue was down by nearly 9% at 2,323 odd crore rupees, whereas EBITDA improved by nearly 31%. Margins improved by 135 basis points to 8.03%, and the profit was up by about 19.7%. So some of those key numbers that we'll be watching out for today.
Let's get back to foreign F&O markets. Stocks that are showing a very strong resilience on the upper side are mostly from the auto ancillary space. So look at Exide Industries. In the past week or so, the counter is up about 7% at 377. This is also accompanied by a very sharp fall in open interest, which essentially means that a lot of short covering is happening. Motherson Sumi is something that needs to be looked on the long side. 142.8. This is an uptick of about 5.4% in the last 1 week. Remember, we are also talking about the weekly expiry. So this is something that deserves mention. Open interest has also risen as far as Motherson is concerned, to the extent of about 4.4%. In particular, watch all tire companies. MRF, Apollo Tires, in the F&O markets, apart from SEAT and Goodyear in the cash markets, as also JK Tire. Reason is very simple. Raw material costs for natural rubber are down, and they've also taken a price rise. So SEAT in any case has risen dramatically over the last 1 week, 1 month or so, especially post earnings at a record high. And of course, you have MRF yesterday that rose 4.4%. Sakshi was pointing out to the very high dividend payout that has come above 200 rupees per share. And of course, this is accompanied not only by a surge in volume. Volume yesterday in F&O was about 6 times higher in as also the price, which rose by 4.4%. Among others, Polycab is something that you need to look at. These are all high beta counters that I am discussing. A drop in open interest by 9%, accompanied by a rise in price by 6.7%. Apart from that, cement, Dalmia Bharat is one of the outperformers. That looks good, up 1.5%. Aarti Industries, and amongst banks, keep an eye out on Yes Bank.
Okay.
Yes, I am talking about Yes Bank.
Yes, finally, so many of our experts also yesterday did talk about it. Sharad Avasti did talk about Yes Bank, and we are again seeing Amit also did talk about Yes Bank, how he's positive with the new opportunities that would come in by way of takeovers or acquisitions, and that's something that we will keep discussing as and when the news flow happens. New York Times is indicating that the US could be announcing this trade deal with the UK today. So let's see whether it is the UK or India or which country? Finally, we will get to know at 7:30 p.m. our time when the deal finally is struck and what are the statements that come in from that account as well. Meanwhile, viewers, keep an eye out on the aviation space as well. Remember, fresh advisories also being given by the airlines at this point in time. I think almost 27 airports are shut till to further notice by the government and the airports authority at the nearby border areas to ensure there is enough significant security for the flyers and tourists as well. And there's also almost 430 flights that have been cancelled since these airports were announced shut since yesterday because of the ongoing geopolitical tension. So we'll continue to keep an eye out on Indigo, SpiceJet for that matter, and of course the airports authority and some of the airport names like GMR, etc. So we'll continue to look at that too. Apart from this, let's also look at some of the other spaces that we can highlight for all our viewers today. Remember, we will also be looking at how crude oil prices slight dip again after yesterday's uptick. So we'll look at how the OMCs and the oil and gas story also comes in. In fact, we have Karishma Sudani now joining in on the program very shortly to highlight for us how we can really look at what are the fresh updates from the aviation space. Good morning, Karishma. Good to have you with us. Well, from yesterday after those airports were announced shut, what are the fresh updates? How many cancellations have we already seen? The last I read was it was over 400. Yesterday we were talking about over 200, but it's nearly doubled in all of yesterday. Tell us what are the fresh updates there.
Morning, Sakshi. Thank you for your question. Definitely a lot happening in the aviation space owing to the fact that major key airports in north of India have been shut. Sakshi, it's very important for us to understand that airports like that of Srinagar and Amritsar and Chandigarh have been hubs when it comes to connecting the north India traffic, either on a space, on a sector to that of south of India, mid of India, or even out of India. So cancelling or halting flights across these key airports has definitely impacted a lot of routes, especially the ones that also fly from Chandigarh to Delhi and then via directly to that of North America, which has been a very favorite route among the aviation space, especially if you see the trend of Indians flying out. Now, more than 400 cancellations, you're absolutely right about it, and this will severely impact the revenues of the airlines, especially that of Indigo and SpiceJet. Indigo was quite in green when it comes to their latest earnings and results, but this could have impact on their operational revenues, which will also be clearly shown in their balance sheet. In terms of any fiscal support coming from Ministry of Civil Aviation, it's very unlikely because as we know, it's a deregulated sector and there is not much that government can do, but airlines are in conversation with the ministry and DGCA to see if there could be a subsidy package that could be launched. Expect airfares to shoot up once the situation stabilizes for the airlines to be able to make an equilibrium with their checks and balances.
Okay, got that. Keep an eye out on that front, Karishma, and thank you so much for all that update. Do keep us updated with any kind of information that you hear from the ministry as to whether they are extending any kind of support to the airlines at this tough hour. Of course, this has come in, unprecedented with them at this point in time, and they have not had it prepared for anything of this sort at this point in time. So far, over 400 flights cancelled. Let's see how things go forward from here. Until 10th May at 5:30 is what we understand so far, that the airports have been asked to stay shut. Any updates? So you give us all of that, and thank you so much for tracking the space for us. All right, viewers, we'll also look at the gold prices. In fact, after yesterday's, how the rates were remained at status quo, we have again seen gold prices also inch a tad bit higher. So we'll continue to keep an eye out on that, and also gold prices that continue to ebb a little lower because of the increasing, possibilities of the US-China deal that could happen.
8:52, ladies and gentlemen. A lot of stocks still left to be discussed, and in this case, we'll now look at the three mid-cap IT stocks, in particular KPIT Technologies, Persistent Systems and Coforge. The reason for KPIT Technologies is very simple. This is the only stock where in the last 6 months or so we've seen FIIs exit and DIIs buy. So whatever that was sold in the market has been purchased by domestic institutions, and their stake has gone up in terms of percentage held of total equity, and FII stake has come down. At the same point of time, earnings by KPIT Technologies, Persistent Systems and Coforge have been more or less in line with market expectations. So essentially, these stocks had also corrected fairly sharply and now offer an opportunity for long-term investors to come back into the stock. Let me just give you an idea about how prices have moved in the last 1 week or so. Coforge is up 3.7%. Accompanied by a rise in open interest, so long positions are being built. Persistent and KPIT Technologies are roughly up between 3.1 and 3.5% respectively. Both have shown a cut in open interest, which basically means short positionings are exiting this counter. And of course, in KPIT, the volume, at least in futures, was 50% higher. Sakshi.
Absolutely. Okay, I just wanted to highlight some news reports that are indicating that focus could be back again on Elon Musk's satellite communications venture Starlink. These news reports have not been confirmed by us on Business Today, but still will highlight for all of you to really see if there is any kind of a development on that front in the coming days. The report says that Starlink has been issued a letter of intent by the Department of Telecom for a SATCOM license, and this development comes at a time when government is negotiating, remember, a bilateral trade agreement with the US to also ward off any kind of Trump's reciprocal tariffs or steep tariffs at this point in time. And finally, we could be seeing things getting clearer for Starlink, Elon Musk's SATCOM, to be launched in the country as well. And that will also bring in back the focus on the telecom space, Bharti Airtel, a lot of infra names at large as well. So we'll keep an eye out on all the telecom space amidst that news flow too. Apart from this, let's also look at some of the key stocks again that we can definitely track for all our viewers again on the earnings front. And apart from that, keep an eye out on the banking space too. ICICI Bank, we'll just also talk about that a bit because that's India's second largest private lender. But now in terms of profitability, it has actually overtaken software giant TCS in the net profits, crossing the 50,000 crore rupees mark for the first time in FY25. So we'll keep that in mind and we'll discuss that as well. Meanwhile, some brokerage reports are also coming in. We have Jeffries on India-Pakistan conflict that has talked about how rising border worries and couples of such incidents over the past decade have although de-escalated with minimal impact on financial markets. An escalation they believe cannot be ruled out though, and any potential escalation could actually drive negative for tourism and for high beta stocks in particular. Any consequent market correction, however, they believe will be short-lived in their view. So we'll keep an eye out on that. Voltas, after the earnings, we have Macquarie report, which maintains an outperform rating and a target price of 15.20. And they do believe the UCP margin surprise project business back to losses as summer panning out weaker than expected is something that they will be looking at. Although they believe the near-term upside will be capped on this one. Instead, they prefer Havells in the same basket share.
Ladies and gentlemen, a lot of emphasis coming in on FMCG counters. Remember, we had a couple of market observers who pointed to a lot of money flow moving into this, how should I say, underreported and underrepresented sector, which everybody says is overpriced. Valuations remain sky high and therefore are not attractive for at least value buyers. Nevertheless, you have a very strong show coming into United Spirits. In the month of May alone, as far as the F&O expiry is concerned, United Spirits is up 13%. This is a stock to be watched mainly on account of the UK FTA as well. Remember, India has promised to cut down import duties on imported scotch. That essentially means they will be halved from 150% to 17%, 70%, and then maybe move down a little further. So this is a stock that you need to look at. I was talking about United Spirits. It's gained 13% so far in the month of May as far as the F&O markets are concerned, 1593 for you. Similarly, you'll also have to look at United Breweries, that one that you've already seen. And apart from that, in the F&O space and FMCG space, you have Marico, which has gained 11%. You have Colgate Palmolive up 10%. You have Tata Consumers up 8.9%. And of course, you have Godrej Consumer Products up 7%. All these have been accompanied by marginally or higher drop in open interest, which essentially means that short covering is happening. All those investors who had put in shorts are now covering them, and therefore you see a rise in price accompanied by a drop in open interest. In particular, for Marico, open interest is down 15%. For Colgate, it's down 3.1%. For Tata Consumer, down 5.5%, and for Godrej Consumer Products, down 11%. Sakshi.
Absolutely. We'll definitely look at all of these stocks. Meanwhile, Shell, you were talking about the tire stocks. In fact, on MRF post earnings, CLSA has come out with a report. It maintains an outperform rating, and it has also hiked the target price to now 1,68,426, up from their earlier target of 1,28,599. They actually believe, even though the margins have come in at 15%, up 337 basis points quarterly, this could be the beginning of the margin upcycle for the company. A bulk of recent commodity correction to also come in from second quarter of FY26. Industry leadership, superior capital efficiency will also drive steady cash flows for the firm as well. So that's another brokerage report that you could keep an eye out on. MRF will be in focus. We did see about about a 1% move yesterday. It's already gone past 1,40,000 mark. Now there is a fresh target of 1,68,000.
9 a.m. ladies and gentlemen, the markets should be open very shortly for you. This of course is a day of reckoning yet again. Everybody would be keeping an eye out on how prices are moving, especially given the background noise that we are traveling with. At the moment, the Nifty is up 210 rupees at 24,624. This is a very, very positive move that is coming. And when you look at yesterday's rally, that was something to be appreciated. Let's look at HDFC Bank, ICICI Bank, and Reliance Industries. These are stocks that make up the three most heaviest weighted counters as far as prices are concerned. All of them are now in positive territory. Look at HDFC Bank trying to open 74 rupees higher. It's crossed 2,000 rupees. That's a very welcome change. Remember, HDFC Bank is the highest weighted counter both in the Nifty and the Bank Nifty. Apart from HDFC Bank, Axis Bank is doing 3.7% uptick at 1203. M&M in top shape, 1% higher. Tech Mahindra 14 rupees higher. Kotak Bank at 2118.9 has gained about 24 rupees. What's pulling the market down? It's Maruti 1.8% lower. Zomato down about 5 rupees 25. TCS down 20 rupees. Reliance down 9 rupees, and Hero Motors down about 1% at 38.30. This is how, ladies and gentlemen, the pre-open is slated. A nice uptick led by banks, HDFC, Axis, and Kotak, and of course there is no stopping M&M and Tech Mahindra. Apart from that, you have ICICI Bank up 1%, Bajaj Finserv adding 0.5%. IndusInd Bank also in the green. By the way, IndusInd Bank, Sakshi, is the top performing F&O banking stock in the month of May, despite all problems that you keep on hearing on the front page of every single financial newspaper. So, sensible people buy the dip, and they buy the dip very aggressively when the stock is in pain. Sakshi.
Yes, absolutely. Let's look at some of the other stocks within the pre-open trade. I want to look at the consumer durable names. Symphony, let's start off with. Remember, the numbers came in absolutely stellar. That stock could be reacting very sharply higher in trade. Revenue uptick of 47%, EBITDA up of 87%, margins also improved as well. Net profit up nearly 90%. You can see an 8.3% uptick in the pre-open trade at 1300 levels. Keep an eye out on also Blue Star and Voltas next. Both of them also reported their numbers. Also, slightly stable numbers coming in from Blue Star this quarter. Revenue uptick of 20%, margin stable, and profitability up by about 21%. But there's a slight dip, 1.9% lower. Voltas, let's look at again. Here, again, what we have seen is that Macquarie has come out with this outperform rating at 1520, but although I think it's CLSA that's cut the target price there, 1.7% up for Voltas, so we'll keep an eye out on that. Coal India, that will be the other one, reported better than estimate kind of numbers, so that's something also that we will keep an eye out on. 5 rupee 15 paisa of dividend also announced. Margins have been aided by better realization as well. Let's look at welcoming now Mitesh Panchal, who joins in to track the markets and technicals for us. Warm welcome to you, Mitesh, and good morning to you yet again. And you know, you're joining in right after the massive day of Indian Armed Forces big operation Sindoor that we've witnessed yesterday. Markets have remained largely resilient despite such border conflicts as well. What is your expectation on the market now?
Good morning, Sakshi. Good morning, Shalji. Good morning to all our viewers. Our expectation remains the same, Sakshi, as what we have discussed in the last show, that we want to be cautiously optimistic. So we are looking at selective stocks in the month of May. We are looking for 3 to 5% sizable correction in this series. So let's see to it. If it doesn't happen, then probably in towards the Diwali, we will be hitting an all-time high. So market is preparing for one dip to the tune of 3 to 5%. Whether it comes in May or June, that we don't know. But at least for the month of May, we wanted to be cautious.
Namaste, Miteshji. A very warm welcome to you, sir. When you look at the weekly expiry that is slated for today, any spaces that you find which might roll over with strength, especially in the NBFC sector? Any stocks that you look at with a positive attitude?
As far as NBFC space is concerned, I think we are not that bullish for the rollover. But if you're asking me about any other sector or stock, probably Adani Group will come with a big bang. So I think Adani Group will perform very well in the month of May as well as June. So we have a very strong positive bias on all the 4 stocks listed on the FNO space from the Adani Group.
Mitesh ji, like I said, and you're also saying that you're cautiously optimistic and you're going to be going with absolute select stocks amidst all this border conflict that's happening. I want to first specifically ask you, amidst this, what is the kind of impact that you see on the tourism, hospitality kind of a space? We have already seen in aviation space, the first brunt is being felt. Over 400 flights cancelled, 27 airports shut. There will be a revenue implication for them. At this point in time, there is no support from the government that we have heard for these airlines. And of course, they are speaking to the government to see if there is any kind of a support package that could be given to them. But at this point in time, there is nothing so far. How would you look at this space at this point in time? Should one absolutely stay away from either aviation or tourism hospitality?
Actually, we have a completely contrary view. I think in the absolute uncertainty like this, what is going on right now, I think both these spaces will perform very well. Probably you may see a correction going forward to the tune of 2 to 5%, but that is going to be an excellent buying opportunity. Sooner than later, dust will settle down and both this sector will spike up. So again, we are of the view that in the global aviation in the range of 5,100 to 5,300 is a good buy. We are looking at a target of 5,800, 6,000 sooner than later. Same is the case with Indian hotels. At the current level, looking very interesting. Lemon Tree is also looking very interesting. So I think this sector per se will witness 3 to 5% correction from the current level. But yeah, if I look at next 1 to 3 months view, one should buy the dip.
Okay. Mitesh ji, 2 sets of stocks. One, complete underperformers, Bank of Baroda and PNB. Within the banking space, which is doing extremely well, by the way, these are 2 stocks that are down. on a net basis when it comes to the May expiry. Bank of Baroda is down about 2.2% so far, PNB down about a percent. Your view on the medium term charts of both these, are the dips to be purchased?
I think we had a view of having a very strong rally as far as PSU stocks are concerned, and our preferred picks are PNB, Bank of Baroda, and State Bank of India. But I think giving a very precise answer to your question, I think the entire space is in the consolidation. So I'll not pick up. We have changed our view. We'll not pick up now PNB, SBI, or Bank of Baroda. They probably need a strong breakout on a monthly chart. So as of now, we'll avoid. If any significant reversal comes on the monthly chart, then only we will buy. Otherwise, Selji, the space will go for a consolidation period for a much longer period of time.
Okay, got that. Now, Mitesh ji, as of yesterday, we were focusing a lot on the UK-India trade deal FTA that we had signed. A lot of focus was on textile space and on the liquor space, auto space as well to some extent. How are you looking at this opportunity? Has it created any fresh buys in your mind?
Yeah, so I think the interesting stock within this development is Tata Motor, and that's what it has advocated on the daily and the weekly chart as well. Yesterday, the stock was up by 4%. So I think sooner than later, Tata Motor will surprise. So out of this free trade agreement between these two countries, UK and India, I think one of the best gainer or one of the biggest gainer, I would like to say, is Tata Motor. So probably in the range of 680 to 720, we keep on accumulating the stock. In the near term, we are looking at a target of 780 and 820. So yes, from this treaty, we can say that Tata Motor is a clear beneficiary going forward.
Okay. Another stock I'll request the PCR to fire is United Spirits. For the last 3 months, the stock has shown very strong traction, and of course, one of the biggest beneficiaries of this India-UK trade initiative will be United Spirits. Mitesh ji, what are the charts of United Spirits telling you for the medium term? Is the previous all-time high now in grasp?
Yeah, you're absolutely bang on. Previous all-time high is here to stay for a longer period of time, and we will break that and hit a new high. So probably the previous high is at 1700, which it has hit in the month of March. We will probably march towards that, and our ultimate target for the next 3 to 6 months is again 1900 to 2000. So yes, this is an excellent buy at the current level.
Okay. United Spirits, ladies and gentlemen, was 1700 rupees, as Mitesh ji mentions very clearly. This was in the early part of Jan, and it dipped all the way down to 1300 rupees in March. From then on, it's a singular one-way rally, and 1700 seems to be in sight. I'll repeat again, India has agreed as a part of the agreement with the UK to bring down customs duty on imported scotch by 50% to 75%, and this number will also decrease in the next decade or so. So get ready to welcome in quality scotch at lower prices. Mitesh ji, of course, does not consume the product but has a very good view on the stock price.
What about Redico Khaitan, also one of the biggest importers of scotch? How would you really look at that? There were reports from Elara that also talked about many of its products would also see a decline as well, in prices for consumers to see. How would you really look at that?
Yeah, so yesterday the stock hit an all-time high at 2665, but unfortunately unable to stay at that level. We have seen a good amount of buying as well because the volume bar is giving a strong breakout. So I think sooner than later, stock will again enter into a new trading range. And probably for this stock, what we are looking at is 2800 to 3000. So in the uncertain period like May, I think the liquor space will outperform in the next 10 to 15 days.
Okay, definitely we'll keep an eye out on that. Now, apart from this, Mitesh ji, can you please also help us understand on some of the stocks that reported their numbers and to how will you be looking at those? The consumer durable space, Voltas, Blue Star, Symphony, how are you looking at these and the numbers that have come in? Symphony, stellar numbers, that came in. Blue Star and Voltas, of course, in line on some accounts, but miss on some others as well.
Yeah, so I think the entire, as far as the entire space is concerned, Sakshi, if you're looking at the correlation between the numbers and the chart patterns, absolutely disappointing since last 3 quarters. So the stellar's numbers reported by any company in this space is getting sold out in the subsequent weeks. Technically speaking, we are bullish on Voltas. If you're looking at the chart pattern of Voltas, perhaps in the recent past, it has hit an all-time high of 1944. 1944 in the month of September, and then we had a very strong sell-off to the tune of 1182. Now, since last few weeks, we are of the view that stock is in the process of forming a bottom, and any close above 1280, 1280 is a strong breakout. So we are watching out for that level. Once it closes above 1280, it's a strong buy. And after that, the first target will be 1530, followed by 1600.
Okay, markets are about to open in the next 2 minutes. What we will also do, ladies and gentlemen, take a detour into the mid cap space. Remember, the three major indices that rose in yesterday, despite all the pain around, were the Nifty Mid Cap Select, the Nifty Alpha 50, and of course, both the mid cap and the small cap indices. Within the mid cap space, let's look at outperformers, stocks that are showing strong traction on the long side, and of course, are very attractively priced. And in this case, it's Indraprasth Gas, 206. So far in the month of May, we've had a 7% uptick. Miteshji, what are the charts of IGL telling you?
Very strong breakout, LG. About 202, it's a clear-cut buy. So with a stop of 198, one can go long at the current level for the potential target of 215 and 220.
Okay, got that. I think just 1 minute to go before we open up. How would you look at Coal India, sir, post earnings?
Coal India is also looking promising, Sakshi, because if you look at the chart pattern again in the consolidation phase, any close above 395 is a great buy.
Okay, ladies and gentlemen, the markets are now open 23 points higher on the Nifty. 221 points uptick on the Nifty Bank, led of course by the private sector HDFC Bank, ICICI Bank, Axis and Kotak. You have a mild red tick on the IT index. I would really not be bothered about that. But let's look at the heavyweights. Tata Motors, no stopping it. Yesterday's top performer, now adding 3% at 701. So one hurdle is crossed by Tata Motors thanks to the the UK India FTA, which is 700 rupees. I'll request Mitesh ji to keep Tata Motors chart ready for further talk. Axis Bank is up 1.2%. You have HDFC Bank a rupee 50 higher. What is Reliance doing? Reliance at the moment is quoting flat at 1405. We'll let that be. Let's come to the FNO space in terms of gainers and losers. Stocks apart from Tata Motors are of course Voltas, again earnings led 2.4% higher, 1273. There's no stopping Motherson Sumi from the auto ancillary space, 145.8, 2.4% higher. Coal India reacting to earnings, 1.5% higher, 389. Tata Chemicals, Mahanagar Gas are the other winners in terms of the lowest price stocks below 200. Let's look at Yes Bank, 0.5% higher, 18.3. You have NMDC, 65 rupees, 0.33% higher. And of course, NHPC, GMR Airports and SGVN are also in strong traction. A very quick look at NSE 500. It's Niva Bupa Health Insurance, that's up 8%, 8.6% at 88 rupees. You have Garden Reach adding another 2.5%. Tejas Networks adding 2.5%, and of course BDL and Cochin Shipyard also in the green. A quick one from you, Mitesh ji. View on Tata Motors and your favorite defense stock amidst the pain that we are all seeing on the border.
Yeah, so I think Tata Motor absolute clear buy, Shailji at the current level. I think stock is heading for a level of 720 to 730 in the next 1 to 2 days. A very strong attraction in the opening 2 minutes, a strong confirmation on 15 minutes and hourly chart. So one can go long at 695 for with a stop of 680 for the potential target of 720, 730 in the next 1 to 2 days.
Let's look at the markets again. We have barring FMCG and pharma, rest all of the sectors are up. India VIX is slightly lower by 2.3% at 18.6 odd levels. So we have some comfort on that level. PSU banks, private banks are leading from the front. On the top movers front, we have Kotak Mahindra Bank, Axis Bank, even names within the NBFCs like Geo Financials are coming back. IndusInd Bank was marked out by Shell. That's also up by about 0.7%. Both the Bajaj twins, Bajaj Finance, Bajaj Finserv are up. Now even SBI is up in trade as well. So the banks are definitely coming back in full throttle at this point in time. Apart from that, oil and gas, both mid and small cap stocks are also driving up. Autos and IT, slight gains coming in. Now we are seeing some volatility engine, 24,400, absolutely flat with a negative bias on the Nifty right now. But banks and NBFCs clearly in focus again. Mitesh ji, how are you looking at the private sector vis-a-vis the PSU sector in the banking space and NBFCs? What are your top choices there? Also, because this space seems to be rather protected from any kind of a geopolitical impact or even the external shocks that we've been seeing on the trade front, sir.
As far as the private banks are concerned, I think what we are looking at is Axis Bank, very strong chart formation at the current level, and at 1176, what we think is that stock is likely to enter into a new trading range. So with a stop of 1160, one can go long for the potential target of 1200, 1230. And I think from not exactly the NBFC space, but I think PNB Housing Finance is looking very promising on the chart. So at the current level, we are going long in PNB Housing Finance as well. And we are expecting 3 to 5% upside in the next 2 to 3 days. So if you are looking at the chart pattern of PNB Housing Finance, about 1020, it's a clear-cut breakout on an hourly chart. So now the stock is looking for 1100, 1120. So with a stop of 10, 1020, 1020, one can go long for the potential target of 1080 and 1120.
Okay, 9:20, the first 5 minutes have lapsed. Let's look at stocks that are moving within the Nifty to get you an idea about how the weekly expiry is panning out. So, on the face of it, there is Tata Motors, there is Kotak and Axis Bank on the positive side. You have the Bajaj twins, Finserv and Bajaj Finance in decent shape. Coal India futures are up 1.1% on earnings. This is a stock that needs to be watched. Power Grid and HCL Tech as well as Tech Mahindra are stocks that are showing traction on the long side. What is pulling the Nifty lower? It's BEL, a marginal downtick, nothing to be worried about. Pharma is in the red. All four stocks, Cipla, Dr. Reddy's, Apollo and Sun Pharma. There is, how should I say, a mild bout of profit booking on Zomato. And of course, technology is in full force, helping the Nifty. The IT index is also up 150 points. And all four shares, all five shares within the Nifty in the tech space led by HCL Technologies are in the green. Miteshji, anything that you are observing in the cash market which deserves attention?
I think JK Tire. I think tire space is buzzing, Shailji. Even CAT is hitting a new 52-week high, 3698. So I think both JK Tire and CAT is one which should look at as far as the cash market is concerned. Again, Aster DM Healthcare is also buzzing. So an eye on Aster DM Healthcare for an intraday will also work out.
Got that. We'll definitely keep an eye out on that. But what about FMCG shares, Mitesh ji? Dabur reported its numbers is now 3% lower. There has been a continued, sentiment weakness that we've seen across the board. Remember we used to talk about how April will start to see those tax cuts come back into the hands of people, consumption theme to come back. But FMCG is not really, coming in that fashion. What do you think is the key reason for the same, and how long do you see such muted trade continuing there?
Yeah, so again, Sakshi, let me give you one data point which probably will surprise you. The way by which we have discussed the data point on gold. So
Yeah.
if we are looking at a 10-year horizon, then the sector which has not performed pretty well if I'll give you, yeah. So if I take the 10-year TRI return, do you know which sector has performed not well? Which are the top two bottom sector? First is pharma. On a 10-year TRI return of pharma index is just 5.6%.
Okay.
And the 10-year healthcare TRI return of Nifty is 7.63%. So the simple point which I'm trying to make here is that when FMCG and pharma stocks went for a correction and a consolidation, it's a very long waiting period. So it will give you a lot of frustrations. So now I think both selected pharma and the entire FMCG basket is going for a big consolidation. So probably for the next 6 to 9 months, you won't see any surprises. On the contrary, FMCG sector is attracting sell on rise strategy. So you see 2% upside in HUL or a Nestle or a Britannia or a Marico will attract the selling. So we are of the view that it is not advisable to pick up this sector and selected stocks from the pharma. This entire sector of FMCG and selected stocks of pharma will go for a very long consolidation period in the next few months.
Okay, ladies and gentlemen, Arpit Beriwal joins us as the derivatives part of the market. He's an analyst with Motilal Oswal Financial Securities. Namaste to you, Arpit ji, and a very warm welcome. How are you analyzing the weekly expiry today? The markets are flat as flat can be as far as the Nifty is concerned. What is catching your attention?
Very good morning to all. So overall, if we look at the indices, talking about Nifty first. So Nifty, if we see technically the trend on the weekly chart is forming higher lows from past 4 weeks. So clearly, buying interest is visible at lower levels. However, from last 8 to 10 sessions, index is consolidating in a range between 24,200 to 24,650 levels, and this has been the nature of index for the last couple of days, where the multiple supports are seen near 24,300 levels, whereas on the upside 24,600 is a major hurdle zone. Now talking from the option data and the derivative front, as today we have weekly expiry, so 24,400 and 24,300 maximum put writing is intact. At the same time, 24,500 is the maximum call writing. So right now the tug of war is going between the Nifty at level around 24,400 levels. Looking at the VWAP level also, 24,444 is a major level that I will be looking out for the expiry day. So far we are expecting a range bound move in Nifty for today's expiry with major support around 24,350, where on the upside 24,450 with the hurdle zone, and stock specific action is likely to continue within this range.
Okay, Arpit, warm welcome. Good morning to you. How are you looking at the key stock ideas that are emerging afresh in this, recovery over the last 1 week, 10 days, or that we've seen in the markets? Where are you penciling in your focus now?
So actually, if we see overall, this market has been more of a stock specific and rightly pointing out to the selected sectors. So we have a couple of sectors on radar. First would be from the NBFC space, and one of our top pick and the favorite pick, that is NBFC from Bajaj Finance. So if we see technically the chart structure of Bajaj Finance for the last couple of days, the stock is corrected from 9,300 levels to almost 8,400, 8,300 levels, and now again we have seen bounce back from lower levels. So technically, the stock is in strong uptrend, and going forward, you can expect good 4 to 5% rally towards 9,350, 9,500 levels, as it has given a range breakout on the monthly scale. And being NBFC outperforming, we're quite bullish on this counter with major support around 8,800 for an upside move towards 9,500. Apart from that, there is another counter from the chemical space, that is SRF. So if we see the chart set of SRF, it has been a quite outperformer in last couple of weeks. The stock is trading at its life high territory. So on the monthly scale, it has given a range breakout of 2850, 2900 levels. Slowly steady, the stock is moving higher. Yesterday, it gave a highest daily close, and this entire sector is in strong outperformance, and this stock is likely to head to new life high territory. Originally, we are quite bullish, and we can expect good 10 to 15% rally with the view of 2 to 3 months view. Immediate basis 2900 with the major support zone for an upside move towards 3200, 3250 levels plus levels.
Okay, got that. Mitesh ji, let's get back with you also and get into the conversation there. Especially, Mitesh ji, we've been talking about how the auto space is on radar, but I also wanted to get a sense on the auto ancillaries as well, sir. With this move that we are seeing on, say, Samvardhan Motherson and some of the other stocks as well, what would your top choices be there?
I think within the auto space, as far as the auto ancillary is concerned, only one sector which is creating a lot of interest right now is the tire sector. So I think we
Okay.
are now bullish on Apollo Tire. If you're looking at the chart pattern
Would
of
you look
Apollo,
at MRF?
yeah, again, see, I used to get this view that Miteshji, I mean, on the other platforms, that Miteshji MRF is such a big number in terms of the price that our viewers will probably not afford to buy that. So probably you can help us with some small ticket
Yeah.
stocks. So that's the reason why I stick to JK tires and Apollo tires. But again, as far as again MRF is concerned, yeah, 1,80,000, 2 lakh is here to stay for a longer period of time. So sooner than later we'll go there. Coming back to Apollo tire, I think above 480, the stock has given a very strong breakout, and we are of the view that this is a sustainable breakout. So we are looking for 520, 550 in the near term. So with a stop of 480, one can go long for the potential target of 520 and 550.
The lot size of MRF is 5, so that's 10 lakhs clear. So, it becomes unaffordable for many people, and it's a purely institutional stock. Let me just find out what the volume is on MRF in the cash market. That will come somewhere here in. Okay, I'll just get back to you. And institutions will not let a stock split or a bonus come in, which essentially means that the price will remain in five, six, actually 6 digits. They don't want retail to come in and spoil their party, and that's the reason, ladies and gentlemen, why you see MRF in 6 digits. There will never be a stock split. There will never be a bonus. So it becomes a play only for institutions. They are very happy with the kind of volume that can come in. Let me just get you a snap quote on MRF and tell you what the volume is. Okay, volume at the moment is 3,500 shares, and that's because we've had earnings. So that's the reason why you see a slightly higher volume of 3,500 shares on MRF. Let's look at the 20-day average of MRF. That should be very easy to find out. Maybe 14, 1,500 shares on a daily basis. So that's how it is.
All right. So that's as far as the tire space is concerned. Arpit, how about you? Auto ancillaries beyond tire space also anything interests you?
Sakshi, if we see overall auto sector, we have seen a lot of disparity within the auto sector. So few counters are life high territories, whereas few counters are already 30-40% corrected from the higher levels. So one interesting pick from from the auto space is looking at from the passenger vehicle space, that is Tata Motors. So if we see overall the counter was in continuously downtrend from last 6 months. So if you look at the monthly chart, the stock is corrected sharply from 980 levels towards 550 levels. However, interesting this month it has negated the formation of higher lows on the monthly scale above 680 to 683 levels after 8 to 9 months. Reversal from its hammer pattern, a breakout of retest near 650 levels, and today we have seen a classical range breakout above 685 levels, crossing over its 50 DEMA. So looking at the chart specific, risk reward is quite favorable in this counter as it will be a reversal play, and slowly steadily the stock can head towards 730, 750 levels positionally, while on the immediate basis 675 will be the support zone. So Tata Motor from a reversal play looks quite favorable at the current price setup, and good slow steady move can be seen towards 730, 750 levels going forward.
Okay, but what are the chances you're penciling in that it can go up to its erstwhile highs, and how long could that take?
See what this counter has corrected significantly as the auto index is corrected. So definitely being an heavyweight, the journey would be slow and steadily. Originally, our first target would be around 800, 820 levels. That would be with a time frame of 1 to 2 months, and then we can revisit and we can re assure about the next further levels. From a positional basis, immediately 800 would be a key level that are we looking out for.
Okay, I think the stock to watch would be Coal India. This is showing signs of strength, and this strength is coming in post a decent set of numbers, which we'll be discussing shortly. 392, 393. What are the option statistics telling you, Arpit, on Coal India? This is the second day of gains.
Talking about Coal India, first, if I look at the price action wise, Coal India from last almost 17 weeks has been trading in a broader range between 660 to around 400 levels. And if you see, it has formed kind of a base formation near it's on the daily and the weekly scale. After a result, definitely you've seen a positive opening. It is holding its gains. Negative formation of lower highs after almost 7 to 8 sessions. Same time, 380, 375 put writing is intact. So definitely the stock can head towards 400 and 405 levels. 405 would be a major key hurdle level. That is the major supply zone. So I think immediate basis 405 is the level to watch out for. We can expect momentum towards 405 levels.
Okay, got that. Another stock that's coming on the radar is BSE. Fresh high for BSE yet again. You can see almost a 3% uptick that's coming in. It's going strong. Any suggestion on this one, Mitesh, as far as BSE is concerned? Would you still be comfortable to buy BSE at these levels at 6,838? It's recovered so sharply over the last 2 months odd, and you know, all those who caught the rally may be just laughing their way to banks at this point. But what should those do who have not participated in this fresh up move?
So the entire rally of BSE reminds me the rally of Masgao Dock and Kochi Shipyard, Sakshi. Every week the stocks are hitting new highs, and it's a surprise for all these investors and the traders that how can a stock move like this. So similarly, now is performing exactly the same way. We are of the view that in such stocks, if you want to participate at any given point of time, allowed, but you need to be very clear with your stop losses. So those who have it, just use the trailing stop loss. Don't exit the stock because it has run up so fast in such a short period of time. I think trailing stop loss strategy is one of the most underrated. But if you are using it effectively, then probably chances are higher that you will have a reasonable exit at the higher level. So again, here the question is not to exit at a perfect time, but I think one should use the trailing stop loss at 68.35. Definitely, I am a buyer with a stop of 6700, and as the stocks goes up, I will trail my stop loss.
Okay. This is as good a time as any to look at other record highs in the market, especially in the time of extreme volatility and a broad consensus that things are really not well in the geopolitical space. For the lack of a better sector, it's tires and it's SEAT. The company reported a fairly decent set of numbers last week. It was helped by lower raw material prices and price increases that it did for its products, plus a very strong demand that came in from the OEM segment. 4% higher, 3783. And it's just not SEAT, which is in top shape. JK Tire up 3%, TVS Sri Chakra up 2%, MRF we've discussed ad nauseum. Specialist tire maker Balakrishna Industries 1.2% higher, 2808, and of course Apollo Tires also in top shape, 0.5% higher, 497. Arpit, any favorites here?
If we see all the tire stocks, definitely we have seen a sharp run on a few of the counters. However, one counter that has not performed, but slowly, steadily can definitely show its steady move. That is Balakrishna Industry. So if we see from the setup wise, after almost 6 to 7 months, it has negated the formation of lower highs on the monthly scale, followed by a hammer candle that clearly indicates that buying was visible at the lower levels. On the daily and the weekly setup, this is giving a strong movement towards higher levels. From last 3 weeks, it is forming a strong bullish candle. Daily scale, the base of the stock is shifting higher. So as it has seen a breakout above 2750 levels after a long time, definitely the stock can head towards 2880, 2920 levels in the short term basis. So Balakrishna would be a preferred pick within the tire space, with keeping stoppers at 2750 for an upside move towards 2880 and then 2920 levels.
Okay, got that. So that's the view that's coming in on that space. Let's look at the top gainers in the Nifty 500 basket. Any names that we could, you know, look at that? Bharat Seats is up, you know, within the auto ancillary pack. Symphony we've marked out for all our viewers. That's up now 11 odd percent, almost 12% now. Very strong up move after the earnings that can be seen on that front. Very rare stocks, KPR Mill for instance, that's up. TBO Tech 5.5% higher that we could mark from this space. Here are the Nifty 500 stocks that we can often discuss. Apart from this, let's look at maybe the PSU banks that are coming back. Let's look at that again. Of course, we do know that private banks are coming up. Can Bank, Indian Overseas Bank, PSB, Central Bank, Indian Bank, about 1% higher for all these. Any fresh PSU banks, Arpit, on radar?
See, overall, post the outcome of the BOB results that we have seen couple of days back, a lot of weakness was seen across the PSU banks as a whole. And post that, we have seen some pullback from the lower levels. But if we see the chart setup of within the PSU pick, the leader, that is SBI. So we would like to stick with the leader within the PSU pack. So SBI, if we see the chart structure wise, it is trading in a broader range between 750 to around 820 levels. So from last almost 8 to 9 sessions, the stock is corrected from the high levels around from 820 to around 780 levels. And today, if we see the setup wise, as we're expecting some momentum in banking, bank nifty and banking stocks, so SBI, the risk reward is quite favorable with a major support around 760 levels. So slowly, steadily, we can see a pullback towards 800 and 810 levels. So SBI would be a preferred pick at its trading in its support zone near its 50 DEMA with a major support around 765 levels for an upside move towards 8110 levels.
Okay, the first about 35 minutes of trade have lapsed. My apologies, 25 minutes of trade have lapsed. Let's look at where volume is moving, and it's moving in strength. It's KPR Mills. Sakshi's marked that 5.7% higher, and already 1.3 times the 5-day average has been traded. This is as good a time as any to again look at textile stocks. Remember, they were the biggest winners in trade yesterday. So you have Kitex Garments, 2.8% higher, 248. You have, so across the board, textile is still in the green. So that basically means that it's a sectoral move that's happening. Vardhaman Textiles, 2.2% higher, 483. Let's look at the entire chain of textile stocks which are integrated backwards. So you have Vardhaman Textiles. Let's look at Ambika Cotton, 0.5% higher. Let's look at stocks such as Arvind Mills. What is Arvind doing? Arvind is also up 0.5%, 378. And of course, the top gainer is it's Bhilwara Textiles, but I don't think so. We'll have the stock price of that one in front of you. 7% higher at 42. You have AYM Syntex doing pretty well, 2% higher, 208. You have Gokaldas Exports. So two major exporters are doing phenomenally well. Gokaldas Exports, 967, 1.6% higher, and who can forget Himmat Singha Seede, a third of a percent higher, 151. Remember, both stocks were dramatically up in yesterday's trade. So textile is something which is doing pretty well as a sector, and of course when you look at the broader markets now, the half hour has lapsed. So advanced decline is firmly in favor of bulls. Sakshi, 1900 shares in the green, my apologies, 1800 shares in the green versus 400 in the red. So it's an easy 4:1 on a broad basis. For every one share that is falling, 4 are in the red. It's almost even Stevens as far as the advanced indices are concerned. We track 19 for you. 10 are in the green and 9 are in the red, gains in the small cap space. So this is very interesting. The Nifty small cap index is the top gainer. It was up yesterday also, up 1% again. Out of the 100 shares, 89 are in the green. So you can well imagine the kind of move that is happening. Let's shift to the small cap space, find out the top performers there. K Fintech, 5% higher. Aegis Logistics, 4.3% higher. You have Tejas Networks, 3.9% higher. CAMS. So it's basically a capital goods move. Sakshi, you had marked BSE. I'm also keen to look at what MCX is doing and what the other brokers are doing. Wait, I have a set of these stocks at one place. So I'm sure Smith's Securities, our very dear friend from Calcutta, is enjoying this bounce, 10% higher at 90. You have a strong move in K Fintech, CamServe, BSC, CDSL, as also Prudent Advisory. Not many people know of this stock, but this is a very good advisor of mutual funds, 2265. So by and large, good gains happening. MCX 6105, about 0.8% higher. Mitesh ji, any favorites in the capital goods space apart from BSC, which you obviously want to chase?
Oswal. I think that stock is looking pretty interesting as of
Motilal Oswal. Okay,
Motilal
got that.
Oswal, yeah, MOSL. So Motilal Oswal is looking pretty interesting at this point of time. It had a great run from the low of 513 to the tune of 777 recently, and had a very sharp correction. We are of the view that it's consolidating right now at the current level. Sooner than later, it will cross 775 and again march towards 1000 levels. So I think within this space, one should go long with Motilal Oswal.
One should go along with Motilal Oswal at this point in time. We'll definitely keep that in our focus too. I also wanted to discuss with both of you the insurance space as well, especially PB Fintech is in news today because it's raised $218 million in a seed round, marking its entry in India's fast-growing healthcare industry. And the management has come out already in the past saying that they have looked at how PB Health could actually expand. Now they want to use these funds to set up 4 to 5 hospitals in and around New Delhi by 2027. In the long term, the company also has a plan to build about 25-30 hospitals network across 10 cities in India, as what Yashish Daya has been speaking about in the media as well, and talking about his aspirations in the healthcare basket. So, you know, PB Fintech is moving from just offering insurance policies and loans and now looking at even the healthcare space at large. How are you looking at this space, Arpit?
Sakshi, if we see overall, looking at the charts wise from the insurance pack, first if I talk about Policy Bazaar, if we see the chart setup wise, overall the stock has corrected significantly from last couple of months. But immediate basis, if we see on the weekly chart, the stock is consolidating between 1600 to 1700 levels from last couple of days. So on the chart wise, it is consolidating, and I think a key level, a trigger level would be 1700 on the closing basis. Closing over 1700 can definitely the stock can propel towards 1800 levels. Apart from that, one of the counter that is there on our radar is ICICI Prudential Life Insurance. If you see the chart setup wise of ICICI Prudential, so overall it was in downtrend, but on the monthly and the weekly scale, it has corrected from the high levels. Now we have seen good bounce back from the lower levels. On the weekly scale, it is consolidating. On the daily scale, it is trading at 200 DEMA. So I think slowly, steadily, I think from a year on, we can expect a catch-up rally towards 615, 630 levels in ICICI Pro. So ICICI Prudential would be a preferred pick as it is at near its lower band, and as we are overall positive on the banking and the insurance pack as a whole. So definitely, slowly, steadily move can be seen towards 620, 630 levels in this counter going forward.
Okay. Mitesh ji, what would be your top pick amongst the 3 best performing mid-cap IT stocks? Coforge, Persistent and KPIT Tech.
I think I'll go with Coforge because the chart pattern is indicating that the stock has already formed a bottom in the range of 5900 to 6200, and slowly and gradually now the stock is heading towards its recent high of 8250, which it has formed on 28th of March 2025. So we are of the view that Coforge is really the stock which one should go ahead with. Based on our system and method, it appeared as a buy on 25th of April. So our clients might have a direct or indirect position into that. I don't have it. But yeah, Coforge is one stock which I'm looking for.
Okay, lot of earnings today, and you know, we are seeing some move ahead of earnings for some of the big ones, like Asian Paints is 0.25% higher, 23.39. Titan is up by about 0.3% at 33.50. Arpit, how is your current strategy on both these 2 large cap Nifty names? Asian Paints has actually been having a tough time. Every time the earnings get reported, we've been seeing disappointment, and following that, we've actually seen across all quarters for this fiscal year that the stock has corrected after the earnings. What is your fresh approach on Asian Paints, even though the fresh triggers are the crude oil prices are ebbing lower, but that could probably only come in, the impact of that largely in the current quarter that we are in. But the reported quarter Q4 might not have that kind of an impact, but overall earnings before that, how would you look at Asian Paints and how would you look at also Titan?
First, talking about Asian Paints, the Asian Paints has been grossly underperforming for the last couple of months. The breakdown that you've seen in the November series 2024 post that the counter corrected towards 2100 levels, and post that from last 3 to 4 months the stock is consolidating between 21 on the downside, whereas on the upside 2450 is the hurdle level. So looking from a Dow theory perspective, right now the stock is still in pain, and from the weekly and the daily basis, as of now there is no major reversal. However, saying that as its lower band 2300 is the immediate support zone for this counter, on the upper band 2440, that is a major hurdle zone that the counter is not able to surpass. So from a going forward, we're expecting the counter to be range bound between this range, as there is no major upside on the immediate basis. 2440 would be a key level to watch out for, and on the downside 2300 is a major support zone. Now talking about overall Titan, so Titan is relatively placed better. From on the monthly scale, from last 21 months, it is trading in a broader range between 3000 to 3800. And last month we have seen strong bullish candle. On the weekly scale also we have seen higher lows formation. So from the chart specific wise, definitely we can see a momentum in Titan going forward towards 3400, 3500 levels. So chart setup wise, it is consolidating, but definitely holding at higher levels. So I think risk reward wise is currently favorable, and slowly steadily can be seen towards 3420, 3450 levels. So compared to Titan and Asian Paints, definitely Titan have a better price pattern wise, and definitely can see more upside in this counter going forward.
Okay, got that. What about you, Mitesh? What would your top choice be?
As far as the sector is concerned, I'll go with Titan only because that is what is looking very promising on the chart. And if you're looking at the chart pattern, probably the stock has completed its downfall and has formed close to a double bottom in the range of 3000 to 3100. We have a good amount of move and then correction. So I think the stock will spend quality time in consolidation, followed by a strong up move. So what we are looking at is around 3600, 3700 in the near term.
Sakshi, I'd just like to mark a development on the ongoing crisis between India and Pakistan. A series of explosions has been heard at the airport in Lahore. One really does not know the origin of those explosions, but Pakistani media is reporting that huge explosions have happened in Lahore airport as well as in Lahore. What that is at the moment is unclear, but this is a report that is coming in from Indian TV channels. Let's see what it is, but only time will tell. So there are multiple explosions coming in from Lahore airport, news of multiple explosions coming in from Lahore airport, and explosions in Lahore as well. With that, let's again focus back into the markets. It's the weekly expiry of the Nifty, flat as flat can be, 33 points lower on the index. I was watching a lot of options data at the moment. A strong support is at 24,300 as far as the options table is concerned. On puts, the open interest substantially higher here, and there doesn't seem to be an unwinding that's happening at 24,450 or 24,500. So it's a range bound trade that we expect as far as the Nifty is concerned. Today the baton has been picked up by the small cap index, the Nifty IT index, and to some extent the other smaller indices in the market. Arpit, what would be your view on Nifty's closing price today?
So looking at the overall chart setup wise, in Nifty has stuck in a range. So from a price pattern perspective, the range is between 24,300 on the downside to 24,550 on the upside. And on the immediate basis, if we see the overall PCR also, in the Nifty PCR has increased from zero point 0.9 to 0.97. And looking at the option data wise, as rightly mentioned, 24,500 is a major call OI zone that is likely to be a major hurdle. And at the same time, 24,300 is the put OI maximum. Along with that, if we see VWAP levels, the Nifty is around VWAP for the weekly is around 24,420 levels, and that is likely to act as a key level for the bulls and bears for today's expiry. So we expected a kind of a consolidative muted range for Nifty for today's expiry, and a closing near around 24,420, 24,430 would be a level that we would be looking out for today's expiry.
Okay. Mitesh, one more sector, with us looking at the upcoming monsoons also, fertilizers and chemicals, is that on your radar for the next 1-2 months or so?
Actually, we have discussed this quite a lot of time that commodity will play a big role in 2025, and
Yes.
our preferred stocks, our preferred sectors are agriculture, chemical, and we are also of the view that metal will also outperform in 2025. So I think yes, Chambal fertilizer and Coromandel is hitting new high every single day. So that's what we are sticking to. So yes, fertilizer is looking very interesting right now. One should go ahead and even at the current level, go long with Coromandel and Chambal fertilizer.
9:53, ladies and gentlemen. This is a space which we need watching as far as the FNO space is concerned. Let's get Arpit into the conversation and look at AU Bank. The reason why I ask AU Bank on the future side is because this is the top performer, up 26% in the month of May alone, and this is something that's gaining rapidly. 500 was the price in April 7th. So in a month, Sakshi, this has appreciated from 500 to 702. Arpit ji, I don't know whether you know or not, one of the original investors in AU Bank was Motilal Oswal Securities. Your this was a PMS scheme. No, this was a private wealth scheme which invested in AU Bank before the IPO. Nevertheless, what are the charts telling you?
देखें तो एयू स्मॉल फाइनेंस का चार्ट स्ट्रक्चर वाइज देखें सो मंथली स्केल एज राइटली मेंशन स्ट्रॉन्ग बुलिश रिकवरी वी हैव सीन फ्रॉम द लोअर लेवल्स एंड एज सून एज सीन अ ब्रेकआउट अबव 620 levels the stock made good momentum towards 702 levels. And if you see the chart specific from last 10 days, the stock was trading in a range between 660 to around 715 levels. And if you see again we have seen some mojo back in the banking and the mid cap bank especially. So chart specific wise definitely a very strong formation. 680 is the immediate support zone, and on the immediate basis 715 is the hurdle zone. A closing above 715 can definitely push the stock towards 730 740 levels. So chart wise on the monthly and the weekly setup, the chart is very strong, and slowly steadily we can see a move towards 750, and then post that 730 35 levels would be on radar going forward.
Okay, so that's the banking space at large. Arpit, anything from the broader markets, mid or small caps that's catching your attention at this point in time? Is there a key sectoral move that's looking positive or specific stocks that you're looking at there?
If we see from the cable space, we have seen a very strong recovery in the cable counters, and
Yeah.
particularly if you talk about KEI,
KEI, yeah.
industry has seen a very spectacular recovery from the lower levels. Post the news of its lot of negativity, the stock has formed a very strong base formation around 3,000 levels, and last month, as from a strong bullish candle, it has negative formation of lower highs on the monthly scale, and from last dailies, last 6 to 7 sessions, the stock is a strong uptrend. Look at the chart specifically also, it was a major hurdle was around 3,300, 3,440 levels. The stock is able to surpass that level, and definitely from here on also we can expect momentum towards 3,550, 3,650 levels going forward. So KEI would be a stock to look out for within the cable space, and definitely there is much more momentum going forward towards 3,600 levels with major support around 3,150 levels.
Okay, so the cables and the wire segment at large could also be in focus. KEI Industries is something that you're looking at. Mitesh, any move in the railway space that you're tracking? FNO, we are looking at Titagarh Rail now climb up about 5% higher in trade. Some other moves that can be seen on IRFC, maybe IRCTC, Rail Vikas as well. Some momentum coming in. Is this momentum that will build on?
No, Sakshi, I think this is just a pullback, right? Probably
Okay.
it will be sold off going forward. So I think Titagarh Wagon, if you're looking at the chart pattern, I mean, it's a clear-cut sell-off. It's a sell on rise. Probably may find some sort of a bottom right now. And what we are looking at today, 3.5% of an upside is nothing but a dead cat bounce. So I think if you're getting an opportunity, exit at the high level. I think so. The entire space will spend quality time in consolidation before it appears for a strong breakout. So right now, advisable to avoid the entire sector.
Okay, 3 minutes to 10 a.m. where we pause a bit. Let's just take a detour into the market. Weekly expiry today, ladies and gentlemen. So the Nifty is flat as flat can be. There is the baton being picked up by IT stocks. The broader markets are in good shape. If you look at the advanced decline ratio, it's 1800 shares versus 432 in the red. So that's pretty much a good strength across the board. The small cap index and the Nifty Alpha 50 are the two top performers, up 1% and 0.5% respectively. IT index is helping the Nifty in a manner not to fall. Therefore, HCL Tech, Infosys, TCS, Tech Mahindra and Wipro within the Nifty are providing support, as are PSU stocks such as SBI and of course the private banks HDFC Bank, ICICI Bank and Axis Bank. Overall, the advanced decline within the Nifty is 19:31. It's more or less expected because it's the weekly expiry. Plus, stocks such as Bombay Stock Exchange, SEAT, Chambal Fertilizers and Marico have hit record highs amidst either an earnings push or expectations of the bonus readjustment in the Bombay Stock Exchange. This is the broader structure of the market. Flat on the Nifty, nice demand coming in for quality stocks, and of course mid caps and small caps partying a bit.
Absolutely. Well, we will thank you then, Arpit and Mitesh, for being with us on the show today and helping us with all your wonderful insights. Hope you have a good day, and let's hope to see you very soon on another edition of Market Today on Business Today Television. Good days to you. Let's look at the winding up of the market. Now slightly flat on 24,378, but Tata Motors, no stopping there, 700. That is the stock to watch out for the next couple of days as well, and we'll continue to keep a keen eye on that front as well. Many thanks, viewers, for joining in on the morning edition of Market Today. Do stay tuned. Market coverage will continue throughout the course of the day. You will hear from managements on earnings and, of course, top market masters guiding you through how to invest in the wake of geopolitical tensions. Stay tuned with us on Business Today Television.